Good morning. Another week rolls by. We're the week of January 24th. Corn actually closed 6 cents higher, shaking off that bearish USDA January report. Soybeans up 10 cents, now actually 5 cents higher than it was before that bearish report. Wheat up 10 cents, also trading higher than before the report. Minneapolis wheat up 10. Actually, Kansas City wheat up 13. Wheat had strength this week because of very bitter cold weather moving into the winter wheat belt. Some areas might get snow, Oklahoma, Texas, but Kansas will not. So Kansas goes from extremely warm weather, 60-degree shirt sleeve weather all winter long, to some bitter cold this week, and the market is a bit worried about the effect on wheat. Live cattle up 295 this week, feeder cattle up 372. Actually, you see the theme here. Every commodity higher, but the main reason here, gold and silver. Gold up $384, almost 8.5% this week, and silver up a whopping $12.79. I think that was close to 14% on the week. Crude oil up $1.73. Basically, all the commodities higher. And look at our measuring stick, dropping a huge 1.797, almost 1.8 points on the dollar this week. So the theme here, dollar weaker, precious metals higher, cattle higher, and pretty much bragging everything else higher. Does the fundamentals even matter when your measuring stick's dropping 1.2% in the week and you've got the gold and silver rocking and rolling? Let's look at these charts and see what things look like. Here's our negativity from the USDA report on the corn chart. Corn prices have varied here from 410 to, what are you looking at? Maybe 490 for the high in the whole past year, basically an 80-cent range, moving almost nowhere. And actually, we lost 20 cents, 22 cents on one day. From the high, we lost 26 cents on one day. That is 1/3 almost of our range for the year in the past year in corn. So do you think anybody really cares about USDA? Or doesn't anyone even care about the fundamentals of corn when you have the dollar declining and all the other commodities inflating at significant levels, particularly, started by the metals and and the cattle. So interesting. So corn actually, I would say you back up here to corn. We broke our uptrend in corn, uh, and now here we are. Or do we just have a higher low in a bigger, longer term uptrend, like maybe a 3-year uptrend? And this USDA report is an anomaly. You had no follow through weakness from that USDA report. Very interesting. Another point of view, very interesting point of view. Uh, Soybeans, you had our run higher and lower, our range for the year. We actually made our low back here in April, just under $10, maybe 9.90 or so. Our high here has been 11.75, 11.70, something like that. So, really not a huge range in soybeans either. Most of the range was right here from mid-October to mid-November and then back down again. But actually, soybeans found support here. That's a higher low. And will we make a higher high than this high at some point? But the point is, you actually have an uptrend in soybeans, a very slow, methodical uptrend. Remember the saying, bottoms last months and tops last minutes. This bottom has lasted a long time. Actually, that might be the low in April, and we are already in an uptrend for almost a year. Do you realize that? Most people don't, because at the bottom, uptrends are almost imperceivable. And of course, maybe this is a little fake out like that USDA report in the corn chart. So here we are in wheat. Wheat making a low in Chicago here in early January, basically the first trading day in January. And now, after a bearish USDA report, basically reversing all of that, plus we are trading higher than we were before the USDA report, which was, of course, bearish of all the commodities. Does anybody believe those numbers? That's a good question. So here is the Minneapolis spring wheat chart. Also, making lows here recently, rallying, and also above the USDA report. And here is the Kansas City wheat. There is that USDA report. We reversed and went higher. Kansas City wheat has a little higher base here. It's been in an uptrend basically since October, different than Minneapolis and Chicago, which made new lows here in December, January. But Kansas City has not. Kansas City is in an uptrend and has been since October based on this chart. You have higher lows. That is a bit stronger market. Is there something up in the Kansas City market? Do we really have a problem there with this winter? Very unusual winter, very, very warm here until mid-January, and then it turns bitter cold. What effect will that have on wheat? Usually, it seems to me, freezes in the spring, in April, after the crop. If it grows early from warm weather early, comes out of dormancy early, grows, and then you get a cold snap in April when the crop is headed or in a boot stage. That's when you get the biggest freezes, not in January. But we'll see. Maybe the market knows something else is up. Here's the cattle market, live cattle rallying back here. We had a reversal last week, but no follow-through weakness. In fact, gained a good share of that back this week. So cattle, like precious metals, not easily giving up on that bull market. And here's the feeder cattle also showing gains for the week. Had a downside reversal last Friday, $8, but actually no follow-through weakness here, actually gaining for the week this week. Maybe feeder cattle aren't done either. And of course, the star commodities here, gold rallying 8.5% this week, almost $5,000, obviously a bull market there. And look at this silver market, gaining $13 basically for the week, 14+%. Wow, what a bull market. Silver has doubled. Silver is over 101. It has more than doubled since breaking above the $50 all-time 6,000-year high just last October. It's gone up 100% since October. Wow, that's a bull market. And now take a look at crude oil. Crude oil sitting here at the lows of the year, $56, bouncing around, gaining this week though. Is crude cheap enough? And maybe the measuring stick of all of these grains, the dollar, is the problem. Look at the dollar index, dropping sharply this week, 4 days, dropping significantly, probably close to 2%, breaking below this recent low, and the next target is 96. That'll be a triple bottom. Triple bottoms, like triple tops, almost never work. I think the dollar is going to break below 96 and run to 90. You cannot, even if fundamentals don't change in commodities like grains, you still have 2.2 billion carry out in corn. USDA loves to carry that number. 350 million bushels in soybeans. They love to carry that number, and 900 plus million bushel carry out in wheat. Prices can never go up, right? What if your measuring stick, the dollar, declines from 110 to 90, declines over, basically 20%, 20 points, near 20% in the matter of a year and a few months. Wow, maybe then your measuring stick has changed, so maybe those commodities should be up 20% with the same fundamentals. Or what happens if you actually have some pressure on markets where precious metals are shooting higher and funds, speculators are looking at that? Or what happens if maybe a little dryness comes in the southern end of South America and funds know that the measuring stick is down so much, so they know there's going to be upside potential. They just need to unlock these grains. Something happens to unlock the grains from their neutral position, if you want to call it that. Basically, if you look at the past year compared to the last 5 years, grains have done almost nothing, which is a great indication of a bottom. But we need something to spark this thing to go higher. It's after January. Maybe it's time to start focusing on a new crop and new fundamentals. And obviously, there are some changes taking place here in the commodities. Just take a look at gold and silver and cattle prices, or even the dollar itself, our measuring stick. interesting changes happening and some exciting possibilities for 2026, maybe 2027 and 28 and beyond. Hope you have a great weekend and good marketing.